500. So here we are. We have a weekly chart of the OEX.X S&P 100 index. It's very important for people to know the names that trade in the index for the new MMTs. It's also important to know what the weighting is of these indexes. And we're going to have someone give an example of what the S&P 100 index is versus the 500 and the S&P mid cap 400, and you also have an S&P small cap 600, but all related to. And where do they come out of? Go ahead and explain that, sir.
Well, the S&P 100 is currently comprised of the top 100 market cap weighted stocks within the S&P 500. The
That's this one
bottom
here.
part of the S&P 500 is the 400 companies that represent the S&P 400 mid cap index.
Hmm. Okay. And so would it be fair to say that the 100 is very important?
Yeah, the 100 is probably the most important indicator as far as weighting, because if that 100 goes down, it's going to lead the 500 down far more than the 400 because of the weighting.
Okay. And understanding the weighting of the names and
There,
what, so when you have a reversal, it's what's going to pile drive the rest of them down, right?
there's all the there's the 100 right there companies.
So basically, these are the 100 companies right here. So, Mr. Plain, um, when a sector of the weighting is that if these things are going to go down in value, it would be fair to say that some of the leadership in here would be a short because the leadership ones would have to fall greater to drive these indexes lower. Wouldn't that be fair to say?
That's exactly right. And not only that, what you would see is if you have leadership in that S&P 100 going down, and they're the largest market cap weighted, and they're going down, what you typically see is to the downside, you see those mid cap 400s go down even greater as far as percents because of the
This is
illiquidity. And just like when they go up, you see mid caps tend to outperform large caps.
because of how they re-leverage the process to the upside
That's
and
exactly
and
right.
to the
And
downside.
you'll see mid caps become large caps and then go back
Oh,
down to mid caps.
that's what this one is right here. These look at the losses on this one here. I mean, you can see because we did a video. This is the top end gainers, but when you start looking down here at the amount of losers, it was pretty big too. You're right. So here today, what I am going to do is show the MMTs, the S&P 100 chart, basically, and I'm going to compare it to the S&P 500 chart, and so that we can take a look S&P 100. And I'm sorry, now we can do the S&P 500, SPX.X, there it is. And we're going to be able to compare the trend cycle right now, where the tops are, okay, and how these tops are being put in, and what the public has done. Now, we've done this in our own platform, which is much more accurate because it'll do all the math for you. That way, it's all done for you. So basically, what we're going to do is we're going to take a look at the S&P 500 and the earnings season that we're in currently right now. Today's date is 1/22 of 2011, 12:17 p.m. Basically, we came right up here like we said we would. We hit that trend line right below that 1300, and you can see that S&P 500 reversal. Not only can you see it, you can believe it because it's right below or challenging the half big weekly bar. It does have support there, and it does. It undercut it, so what? The body of the weekly bar did close above half of the previous week bar. So that's bullish in itself. What we're going to be looking for, if weakness comes in the S&P 500, we're going to close below it. Then we would be looking for a big red bar like this, okay, that would follow through, and that we would break this bottom low. That's that support one at, right, 1260 handle. Over here, we can say that the S&P dropping to 1231 over here would be okay too. Naturally, there'll be a pit stop there at 1251, but let us not forget the lower end somewhere down in here is going to be that 1209 handle. A lot of people are going to be banking where the people that trade lots of contracts on the S&P, if we were to reverse and break below and close it, and this half bar weekly becomes resistance, then I know that I'm getting put contracts on certain kinds of ETFs. I'm doing bear ETFs. I'm doing other related instruments related to a reversal. It's not confirmed 100%. It's only week 1 of 3. It wasn't a big sell through. Now, when we take a look at the 100, which is the key one that Mr. Plain was talking about, is we would be looking for this bar here. Once again, it's going to come right down to the SMF weekly bar. And in your SMF market maker platform, it'll do all the math for you, because until we close below it, the weekly body, so this next week, if we go down in the earnings season and that becomes resistance, we would see on the daily charts in the S&P 500 that we would have a lot more selling intraday, and it would tell us ahead of time, well, we're headed that way. So that's going to be the key, is how we build here. And the key is, if this one starts to fall bigger and faster, well, then we know that the S&P is going to fall faster. But we also know that some of the key indexes we're looking at is that S&P Midcap 400. That's this one right here. And, when you're going to have a reversal and pullback, is you're going to look where that weakness would get weaker. And this is the S&P 100 and the S&P 500. And right now, if we hold and consolidate above it and want to break higher on a weekly level during the earnings, up we go. Breaking below, weakness gets put in, and it starts to get nasty on the downside. This one here on the S&P 500, like I said, it managed to get above it, but we're going to find out next week during the earnings season.